Hi, Lee Phillips again, and I want to talk to you about what is an HRA. It's called a health reimbursement arrangement or a health reimbursement agreement or whatever you want to call it. It is another type of benefit plan under ERISA, the Employee Retirement Income Security Act, and it's kind of an unusual plan. If you have a little company, you can set it up. Ideally, you have employees and they use it. You can use it for an individual owned company, one owner, one employee. It gets a little snakier if you do that, but it can be done. This isn't as easy to set up as an HSA, health savings account, but you can use it. The advantage is you can put as much money as you want into it. So you put money in, $2,000, $5,000, whatever it is, $10,000 this year. The only restriction is it's supposed to be reasonable to meet medical needs. Well, I mean, if you break your leg today, it can be $6 million, right? So what's reasonable to meet medical needs? The catch is when you put the money in from the company, and you do have to include employees. You have to include employees in the HSAs too, and pretty much all of the benefit plans, and all of the retirement plans under ERISA. There are restrictions to prevent you from just providing it to you and not providing it to the employees. So most of you don't have a lot of employees though. You put the money in, the company gets a tax deduction. That money sits in the account and you reimburse yourself for health-related expenses, just like you would at an HSA. Except in this case, we do not need an insurance company to manage this money. The company sets up their general checking account, and then they have another checking account that we call the HRA account. It's in the same bank. You move money from general checking over to HRA checking. How much money? There's no limit, basically. You move it over, the company gets a deduction for it, it goes into the account, and you can use it to reimburse yourself for qualified health-related expenses. That's basically anything that's not an over-the-counter. It's the eyeglasses, it's the dentist, it's all of the medical stuff that you'd normally think of, the prescriptions, and the insurance premiums. We forgot to tell you that in the HSA, the insurance premiums are also included. So it's a way of providing health care insurance and health care reimbursement. What it does is it makes all of your health care stuff not tax deductible, but tax free. It comes out of the company gets a deduction over into the HRA account. You reimburse out of the HRA account, but that comes to you. There's no 1099, W-2, nothing. It just comes to you as a reimbursement. If the account is ever audited, you need all the receipts to explain why we paid money out of the HRA account. This is similar to an HSA in that it's not a 125. There's no use it or lose it rules. If you build money up in the account, it stays in the account, and the company, you, can continue to claim against that money until it's all gone. But you can actually build money in the account. You can invest the money in the account. It grows in the account tax-free, and you get to control it. You get to get it back at any time for health-related expenses, tax-free. Now, if you ever terminate the plan, the money in the plan will come to the then participating employees. There's no vesting in this. When the employee leaves, they don't have a claim against the money that's been put away for them. So I can keep the plan going, and after I close my little company down. I won't actually physically close it down, but when I retire, all the employees in my company, they go bye-bye. The account is still there though. They didn't take their money with them. So you can use this account for health-related expenses in your old age, long-term care, all sorts of stuff. Or you could terminate the plan and the money in the plan comes to the then participating employees as income. You have to pay income tax on it. But you got to pay income tax on your 401k money and all that stuff when you get it back to your standard IRAs. So it really isn't a bad deal, guys. And you can spend this money for health-related stuff tax-free. The HRA is a really cool plan. If you can qualify for it, it's really neat, guys. So don't forget about the HRA. Not as many, pretty much anybody can, any little business can qualify for an HSA, and the insurance company is going to set it up for them. The HRA, more complicated. You've got to set it up, and I have a kit that teaches you how to set it up. I'm sure you're stunned about that. But you can set it up. The company can operate it. You don't need third parties. There's no tax return that the HRA files every year, like there is a 401k. They have to file a tax return. But there's no tax return. There's no nothing. Basically, there's an independent banking account that sits here. It's pretty cool, guys. Check it out. This is Lee Phillips. I'm speaking on HRAs, health reimbursement arrangements, agreements, whatever you want to call them. And don't forget to subscribe.